Hello at Forex Signals and How to Trade. We are a remote working company, and that means as a team, we very, very rarely get the chance to actually meet face to face. However, just before Christmas, Shane flew over to London from the States and we had a chance to meet up and talk through markets, trade ideas, and the amazing plans that we've got for How to Trade this year. Given it's the sort of thing that doesn't happen very often, we asked you to send in questions so we could debate and discuss them. Many of you did, and they were great questions, so we hired some cameras, set them up into record, and this is what Connor, Shane, and myself had to say. Hello everybody, welcome along. As you can see, we are not working remotely for once. Strangely, we're all sitting together. Mr. Shane Vinier's flown all the way across the Atlantic, and we're all together in London. Good morning, gentlemen. How was your flight, Shane? Everything on good?
Oh, it was fantastic, fantastic. Delayed twice, terrible food, but hey, we got here in one piece, and that's a W. To me, that's a W.
Nice. It's kind of weird, like working with people day in, day out, over and over again, and you talk about markets left, right, and centre all day, and then all of a sudden you see each other for the first time, and it's like you're meeting someone for the first time. It's like, oh, nice to meet you. How are you doing? You know, it's very, very strange.
They're actually
isn't it?
real, aren't they? Like in front of you, it's just like, are they actually real? I didn't know that.
It's kind of really strange, yeah. So we are all here. We said in one of our the promos last week, please send in your questions as we're all together discussing stuff for next year. So people have sent in a load of questions, a bit of an AMA style discussion. So we thought we'd sit down and go through them and see what answers we can come up for you. So first question came in to talk about trading habits, trading bad habits. What are the key trading bad habits that people do in, day out? Because we see it all in the room every single day. People doing the same things, repeating the same mistakes. What are those bad habits?
Overtrading, number one, first and foremost. Yeah. 30-second time frames, 1 minute time frames, trading 50 markets at once. I mean, what do you think, Connor? I see that one every single day.
1 minute time frames is what I used to trade on when I first started, and you make a great trade, and you're like, wow, this is amazing. And then suddenly reality hits that trading on a 1 minute time frame consistently is so hard. You have to have a real strong mind for it. So I just cut back on the trading, put it down to a 4-hour daily. Yeah. I know you like the daily chart.
Yeah, I do, yeah. But there seems to be like you join the community, you log in, you see everybody else talking, and everyone's trading this, and you feel like you're missing out, don't you? You feel that and so there's this compulsion to always jump in to every single market all the time. It's a very interesting one. One of the bad habits I see, and I used to make this a lot, is you'd have a bad trade, and what you really need to do, what you know you need to do, is to stop trading, is to not jump straight back in. Take a breather, go out for a quick walk, make a drink, something like that. But no, you just jump straight back in the markets. That's something that I see people doing all the time because they just lost on one particular trade, and then 5 minutes later they're back in the market.
It's just classic chase scenario. I mean, you're not just trying to get back what you lost; you're trying to get back what you had as well. So you're always chasing the high water mark. See it day in and day out. Catastrophic mistake, and it's one that repeats itself.
Everyone talks about stop losses and not setting stop losses as being a main mistake, but one of the biggest mistakes, like you're saying, FOMO, fear of missing out. That can be more detrimental to actually not setting a stop losses. If you took a trade early and you could have made a lot more than you actually made, that can actually hurt more than taking a loss. So that's a big mistake people make. If you're in a trade and you've taken good profit, just be happy with it. Don't try and chase the necessarily 200 pip move that may not have happened. So.
Next question that came in this morning, talking about trading misconceptions. What are the biggest misconceptions that you think exist in the market that people experience every day?
That you have to always be trading. It goes right back to overtrading. We have several traders every day. I'm in front of the screen 14 hours, 16 hours, and they feel like they have to be in the game around the clock. Horrible mistake. Horrible misconception. Just because you're a trader doesn't mean you push the buy and sell button. A lot of it's analysis.
Yeah.
I mean, if you enjoy the analysis, you don't always have to be buying and selling.
If you get into a trade which has legs, a few months worth of good moves to whatever direction you're in, you don't have to trade like in that time frame. You can just follow the trade you're actually in. You don't have to go looking towards other markets necessarily. Yeah. I know you had, sorry to put you on the spot, you had a good gold trade, right?
Yeah.
But that was it's exactly that sort of thing. You may have not have traded 20 times in that time frame. You just traded once, but you came to a better outcome in terms of profit percentage overall than if you were doing 10 trades a day.
Yeah, it's because a trade like that, you feel, even though when there was a big pullback in that gold market and it really went against me, and I'm sat there thinking, oh my goodness, I've told everybody in the room what my trade is, and I'm going to be zero to hero or hero to zero very quickly on something like that. But it did work out in the end. But you do self-doubt. You do feel a sense that, am I right? Am I wrong? And then the compulsion to sort of like, oh, maybe I'm going to save face here, maybe I should come out early. And holding steady to your belief, that's a really, really hard thing to do sometimes.
But there's a conception that the time you put in, the effort you put in terms of time, should equate to returns.
Yeah.
And that's not the case, is it, at all?
You have to trust it. Yeah. You have to trust the analysis. I mean, you stayed patient. You did everything right. Trust it. Let the trade play out.
Yeah. Question 3 is about prop. This is an interesting one, and obviously we've got some funded guys now in the community, which is good to see. This question is talked specifically about prop. Just got funded, but they're worried about trading at a large account size because it is real money. What kind of advice can you offer someone like that?
Well, one of the best things about the program, 180 days.
Yeah, you got a lot of time.
30 days of trade.
Yeah.
100 unique trades. By that time, you're going to know how to trade, or you're going to know if you can trade.
Yeah.
The dollar amounts, that's just getting used to the live market. You also have one-on-one coaching for funded traders. If you're having an issue, we have a talk.
Yeah.
I never had that when I was trading on a funded account. I wish I had that gap where I took time to realise actually trading a big amount, a larger amount, it was quite a significant jump. You do need to prepare yourself for it, as you said, the one-on-one mentoring, or, for example, just have a practice on a demo account. Because you've got such a long time, 180 days, and I had, say, 30 days, I had to go just straight into it. But if you've got that time to sort of practice just a little bit first, just to prepare yourself, then that would be quite a valuable thing to do as well.
Yeah. I think it's a good having. You're not going to get this with a lot of other prop firms as well, with the fact that the academy runs underneath it. So if there's something that you're unaware of or you need a bit of work on, that academy underpins the entire thing. So you've got that educational thing to fall back on, and then one-on-one coaching as well. You take a break, have a chat with one of us, and then reset. Have that sounding board at the back that just gives you a bit of perspective, and helps you just smooth out, because suddenly you're live and you think, oh, what am I going to do? So yeah. I mean, and it's not a question about like saying, okay, by that stage and you've passed your evaluation, you'll know what your strategy is. You'll know what that is, but it's just that kind of like just that easing in, and also as well, people feel a lot of pressure, I think, to when they get funded. Right, that's it. I've got to perform. Just nice and slow. Yeah, take some time. I think that's really important.
Yeah, the reality of it is money changes the game. When it's real money, the game changes. Theoretically, nothing's changed.
Yeah.
You've got your strategy. All you need to do is execute. But the real money changes things, and that's where having that time and that academy can really help.
Yeah.
Sticky notes, reminders, that's a big thing for me. I always have a sticky note like stuck to my screen, literally, which has the main points down. So you could say something like, it's the same, which is the same in theory, but you're now just trading on a real account. So you just know all you've got to do is sort of carry on with the strategy you had before. Yeah. You don't need to worry or anything like that. It's the same approach. If you start trying to change things just because you're on a live account, that's when you get sort of discrepancies in your performance, really.
Yeah. You see people suddenly sort of, when it becomes real money like that, and it's big money as well, that perspective of jumping up to big money, it's a lot. So those swings, it's very, very tempting to then focus on the P&L. When what you really need to do is just always come back home to that strategy, So I think that's also really important as well. Oh, things that you wish you'd known. This is a good one. Things that you wish you'd known before you started. That's a good one. For me, it's about the length of time it takes. Yeah. So I wish I'd known that it takes a lot longer to become competent at trading than I thought. To be honest with you, if I'm being really honest, when I first started, I thought 6 months, I'll have it nailed. So for me, it's the amount of time perspective involved.
Practice, for me, in terms of you can get yourself a strategy, and it could be a good one, it could give you that edge that you need, but I failed to grasp that you actually still needed to practice that strategy for quite a few months before you became actually good at trading it on a live account. So I always thought, because I had the strategy, that's it, it's game over. I've got the strategy. But you still need to practice it, you still need to execute it, and the execution time period took longer than I thought it would.
Just staying flexible. There is no right answer to this. The trader you are today isn't the trader you're going to be tomorrow. And trying to hold yourself to a strategy that's not performing, or if you're not performing, you can change your mind. I wish I knew that. I kicked a dead horse for months, and it just didn't work. So being able to look in the mirror and say, okay, time to make an adjustment, I wish I would have known that before I started.
Yeah, really, really good answers.
Hope you enjoyed that, and thank you very much for those of you who sent in questions. I hope we managed to answer some of them for you. Don't forget to follow us on all of the social channels, and please do give us a thumbs up if you like the video, and let us know what you think in the comment section below.